Whether you're new to property or somebody's been doing this a long time, there'll come a point where you're going to be unable to do that next deal, either because you have insufficient funds or you don't necessarily have the right skills or experience to be able to do that deal. In this video, I'm going to share with you the power of property OPIUM so you never ever have to worry about finding the money for that next deal. Hi, I'm Saj Hussain, also known as the Property Joint Venture Expert and your partner for wealth creation through property. And welcome to episode number 4 of the Saj Hussain Show. Property investing can be quite a lonely business with just you, your laptop and your phone, and it doesn't matter how productive you are, there's only so much you can achieve in a day. I'm a really big fan of collaborating with others to achieve a lot more. And essentially what I'd be doing is leveraging other people. So I'm sure you've heard the term two heads are better than one. And this definitely applies when it comes to property investing. So when we talk about leveraging other people, we can be leveraging time, money, skill, experience, their contacts, just to name a few things. What this means for you is you get more done in less time. Effectively, you get further faster. So in this video, I'm going to be focusing specifically on leveraging other people's money, or property opium as I sometimes call it, other property investors' unused money. First of all, a quick disclaimer. Please remember, I'm not a financial advisor, an accountant, a solicitor, and I'm not qualified to give any type of financial advice. What I do have is a huge amount of experience in property investing and using other investors' money in deals. So what I'd like to do is share with you my knowledge and my experience really in an educational way. Now let me tell you about how I created the concept of property joint ventures and leveraging other people's money. I'm only kidding. I'm not the person that created this concept, but I've certainly mastered this particular skill. Now let me just take you back in terms of how I stumbled across this, because it was really by accident that I discovered this particular way of doing deals. Going back about 11 years when I first started getting involved in property, my very first strategy was sourcing deals, and that was by going out there, finding opportunities directly from vendors and then offering those to investors to purchase, and I'll charge a fee for that. Effectively sourcing the deals on. That's what I was doing. And I remember I got to a deal. This was after I've been doing this for a little while, sourcing deals. I found a deal. The seller was really very motivated. In fact, he was about to get repossessed, so he was under enormous pressure to try and get a deal done. I thought the numbers were okay. The investor that was looking to purchase the deal from me, however, he was a little bit unsure. He thought the numbers weren't quite as good as I thought they were going to be. Now, remember, when you're looking at deals, there's always different perspectives in terms of what the numbers look like, what they mean, and people have different opinions of how they think that particular deal might pan out. Now, because we didn't have a huge amount of time, the person was going to lose the house anyway due to repossession, and the buyer wasn't sure. Ultimately, it meant that nobody was going to win. So out of sheer desperation, really, I tried to construct a deal just to make this thing work. And what I agreed with the investor who bought the deal was that if you buy the deal, I would take care of getting the little bit of refurb work done on it, getting the decoration, carpets and stuff in. I'll find the tenants and get it tenanted at the price I said it would market for, the market rent would be. And we'd just take a little bit of a profit share. That's how we'd structure the deal. The buyer of the deal was more than happy with that, because effectively I de-risked it for them by being involved on an ongoing basis, rather than just taking a fee and leaving. What it meant that I was still committed and now had a vested interest in that particular deal. The seller was happy because it just meant the deal was done. He wasn't going to get repossessed, and we'd be able to take this property off his hand and resolve the problem for him. Now, by accident, I'd effectively stumbled into doing a joint venture. That was the very first deal I did. In fact, I think it's something like £50 a month that was creating me. Hey! But it was my first deal, and first deal as a joint venture. As I said, I kind of stumbled across it. But it really got me thinking, because at the time, I was focusing on selling a deal, earning some money, selling a deal, earning some money. But effectively, if I stopped finding deals or selling deals, the money would stop. And this was a way to be able to continue creating an income without having to do the work every single month, by having a share in a particular project. And that's what really got me thinking about joint ventures and learning more about it and how to structure these type of deals. And from sourcing, I went on to do single buy-to-lets and then HMOs and then flipping property and more recently development. So if you follow my story, you know that's been the core strategies that I've been involved in. Lots of other peripheries, but they've been my really core strategies I've worked on. Ultimately, the business has been built by using other investors' cash to grow that business. Just as I mentioned earlier on, there's many different things you can leverage from a property investor. It might be time, money, skill, experience, contacts. Here, what we want to do is focus on leveraging the money. Now, the money can come in very different shapes and sizes as well from a property investor. So, for example, it could be regular investors like you and I, or somebody just getting started in property who's got some cash. It could be that's the form of funds that you have access to your deal. Or it could be, for example, the investor's pension money. It could be, say, crowdfunding money where investors are together contributing towards your deal. There's many different shapes and forms that money takes. But what I want to focus on specifically is two things. The first one is a straightforward loan, and the second is a joint venture. So let's just first look at the loan in terms of what a loan is. So when we talk, because the reason I want to get right down into the basics, because you'll hear sometimes at property events, someone's talking about, hey, I've got this amazing deal. I'm looking to do a JV with somebody and I'm going to do a fixed return at 8% per year, or whatever it might be. And actually the language is all mixed up in terms of what they're offering, because they're a little bit unclear themselves as to how it's presented. So I just want to break that down and get that really clear. So when we're talking about a loan, the loan really is a fixed amount of money for a fixed period of time with a fixed return. So what that does, it takes a lot of the risk away for the investor. So for example, it could be £100,000 loan for a period of 12 months at, say, 10%. That means at the end of the year, £110,000 is due back to the investor, regardless of whether the deal makes more money or actually even makes a loss. That doesn't affect the investor. The investor's return is fixed. Now, if on the other hand, you're looking at it as a joint venture, a joint venture in its purest sense is really about sharing the risk and the reward. And a bit of a formal definition, if you like, I use is the joint pursuit of profit from property by two or more parties. Now, it's about, as I said, sharing the risk and the reward. So it could be the same £100,000 the investor puts into that property, and it makes, say, £20,000 at the end of it, and 10,000 of that goes to the developer, and then the £100,000 goes back to the investor, and the £10,000 goes back to the investor. Actually, in both of those two scenarios, the return for the investor was the same. It was based on £100,000 going in and £10,000 coming out as profit or interest. Now, the difference really is how the deal is structured and how the risk is associated with that deal. Now, looking at it as a joint venture, if that same particular deal with £100,000 goes in, and at the end of it, let's say actually it took a little bit longer to do the deal and it cost a little bit more. Because let's face it, in property, the chance of deals taking longer and costing more is quite a common thing. And in that situation, let's say there was no profit at the end of it, it only achieved £100,000. So the £100,000 would go back to the investor, but there'd be no profit to share. So although there was the expectation that they could have made more in the joint venture, in this scenario, they may have made less. And let's say it was even worse than that. Let's say they only achieved £90,000. Now there's a £10,000 deficit in that particular project. So it's really important to understand the distinction between a loan and a joint venture, and not to mix up the language, or more importantly, even mix that up in one particular project. Now, I know sometimes people do that. My belief, however, is you should keep these things separate. So when you're borrowing money, it's a fixed amount of money you're borrowing for a fixed period of time with a fixed return, regardless of the outcome. If it's a joint venture you're looking at, then really you're going to be sharing the risks and the rewards, and it's really important we've got the right documentation around that as well. And I'll talk more about that in just a short while. So with the joint venture, the expectations generally are that the rewards could be higher, but the risks are higher. With a loan, the rewards may be lower, but the risks are lower too. I know what you're thinking. It's all well and good, but where am I going to find these people, right? Okay, well, let's talk about where we can find people who would work with us, potentially be our investors, and for us to be investable for them to want to work with. So first of all, something that's really important I need to share with you is that there is some regulation around this area, the area of raising investment money. The FCA, the Financial Conduct Authority, have a policy statement, and the documents referred to as the PS 13/3. In fact, I'll put some details on the screen. Maybe Google it and you should be able to find that document. Have a read through it, and that'll help you understand a little bit more about how that works. In a nutshell, if you're working primarily with family and friends and people you have an existing relationship with, then that's something you're probably going to be okay with. However, if you're looking to market for investment opportunities, really that should be focused at those that are high net worth individuals or sophisticated investors rather than the general public, or sometimes classed as retail investors. So look, have a read through that. I think that document is something that will really help you in terms of how you position yourself and how you market for investment. So I like to use two methods in terms of finding suitable investors and attracting them to you. The first one is more of what I call a bit of a broadcast message. You're pushing the message out there. So let me give you an example. If you've got an opportunity, a property investment opportunity that somebody could work with you on that, effectively, let's assume you're borrowing the money as a loan and you're looking to raise that cash, you have to get people to come to you to talk about the money. So let me just explain something to you. Let's say I have a £20 note here right now. So if I was to offer you this £20 note right now for £25, would you be rushing to do a deal with me? No, probably not. I'll tell you what, I'll accept £20. For this £20 note, I'm happy to accept £20. No, still not excited. Why not? Because actually there's no value there, there's no opportunity there, there's no gain. If I said to you on the other hand, you know what, I'll take £10 for this £20 note. Right now, I'll take £10 for this £20 note. You'll be jumping out of your seat to do that deal with me. The reason being because you have an opportunity to make money. The certainty of that happening is there. The risk is being reduced. Now, there are still some risks. However, on your basic analysis of that, you can see that there's an opportunity there. Now, in the same way, if you have a property investment opportunity and you're looking to bring people to you, you need to be able to demonstrate that you can help somebody else make money. Now, quite often the mindset is when we're looking for money is it's a little bit like, you know, we have a begging bowl and we're going around and say, please sir, can I have some money for my deal? And you know, you see this at networking events and property events when people are pretty desperate, and you can smell the desperateness when they're looking to raise money, and that really is not a good look and it doesn't inspire confidence. Whereas on the other hand, if you just understand, in that example earlier, I was going to help you double your money, right? So you could see that you were going to get an increase in value. Now, if I was going to sell that one opportunity, how many times could I sell it? Yeah, just the once. The reality is I could only sell that opportunity once. Now, if I'm only able to sell that opportunity once, i.e. take that deal or that £20 note once and offer that to somebody, then the reality is that the person who holds the deal, the opportunity, they're the ones in control, they're the ones that have the power. And reality is we need to share that with people to say, look, you know, what I have is an opportunity for somebody to make money, right? This is not a begging bowl, you're offering an opportunity, a gift to somebody to be able to make money with you. And I think that's just a shift in mindset in how we position the opportunity and how we attract people to us, and this also affects our investability, i.e. how investable are we in the investors of an eye, in the eyes of an investor. So if an investor doesn't really value what you're doing, then they're going to be much more tough in terms of negotiating with you. If on the other hand, they can see you've got a huge opportunity, there's a number of people that want to work with you on it, you will not struggle to get that deal done. I hope that makes sense in terms of just understanding the value of what you do, and I think that's really important. I see that as a big mistake over the years of teaching people to raise money. One of the things I see a lot that people struggle with is really the perception around the value that they bring to a deal. So in that example where I was just broadcasting my message, the opportunity of either the £20 note or the property to come and invest in and get involved in, really what I have there is a transactional relationship. You're effectively basing everything just on the numbers that you have rather than the individual. Now, my preferred method of making you investable for people to want to work with you is for you to make sure that people are attracted to what you're doing. So effectively you're doing more kind of pull marketing rather than pushing and broadcasting messages out. So what do I mean by that? Well, it's really just about sharing your message, what you're doing, and letting people know what you're up to, so people have an opportunity to ask questions and maybe get involved with you. So for example, just by doing these videos that I do and just kind of speaking at events, you know, people learn about what I do. I do HMOs in Birmingham and I work with investors, and what that does, it starts conversations. And that way I'm not marketing necessarily. I'm not saying, here's a £20 note, do you want to come and buy it? Here's a deal, do you want to come and invest in it? What I'm able to do is just have a conversation and find the right people to work with. Now, the best time to find money for your deals is when you don't need it. Yeah, I did just say that. So what I mean by that is if you're constantly out there marketing yourself and you're having conversations, that means when you need the funds for a particular project, you'll find that they'll be easier to attract people to you to pick up those conversations. Now, if you say speak to somebody and have a conversation with them in January, and then in June you get back to them and say, yeah, you know that deal we spoke about, you know, in January, I'm now ready to do that, the chances are they'll have probably spent that money somewhere else. So, you know, you have to maintain the relationship. But ultimately, this is more about building a relationship and getting to know people. Now, I think when you start speaking to somebody about potentially working with you, it's really important to take the time and just to understand a little bit more about them, why they want to invest, what they're looking to achieve, their expectations around returns, what sort of relationship they have with risk, and what sort of risk profile that they have. Now, all these things will affect what might be a suitable deal for them. Now, what you're not trying to do here is sell your opportunity to them. What you're trying to do is understand what it is that they might be looking for, and then think about whether you have in your deal the possibility of structuring it in such a way that delivers for them and gives them what they want. Now, that for me is the best way to do these type of deals. I think is a much more effective way, and it's produced much more in the way of results for me than many other things that I've done. Now, you know, I'm sharing some of my knowledge and experience with you over the last decade or so that I've been doing this, but you know, there's a huge number of things I've done in property that haven't really worked so well, and things I've tried that, you know, have failed miserably on. But what I'm trying to do here is share with you the nuggets and the things that have worked really well and the things that you'll find useful. Sometimes you'll get approached by somebody that wants to work with you, and you talk about what you're doing and you think this is great, and they say they want to do a joint venture with you, and you don't really know them, you've barely kind of met them, you're still kind of getting to know them a little bit, and really it doesn't comply with in terms of regulation, in terms of marketing for investment as well. So how do you deal with that? Well, actually, I have a really simple way to deal with that. So I tend to say to investors to work with me, it's a minimum of £50,000. So if you're lending money for a project, it's at least £50,000 going up to 250,000. So those are straightforward loans that go into a project. And most of the properties I tend to buy, prefer to buy for cash. It just means I'm in a better position to do the deals. I can do the deals much quicker than many other investors that need bridging or mortgages. And it just means, you know, I'm in a better position to get those deals done. And I also attract really good deals as well by being in that strong position. Now, if the investor has, say, more than £450,000 to invest, then I'll talk about potentially joint ventures, because they may be able to qualify as a sophisticated investor or a high net worth individual. As long as I can get them to comply with the relevant regulations, then that's an opportunity. So in the same way, you know, just to protect yourself from that, just focus on borrowing money for deals rather than going straight into joint ventures. When you get to know people, there's an established relationship there, you've known people for a little while, you know, you can maybe have that conversation separately, but that's a great way to separate out. Remember also, when you're taking the time to get to know your potential investor, is to really understand what's important for them and what's the most important thing for them in doing a deal with you. Now, oftentimes that I'll find that investors I'm having a conversation with, they want to get involved not simply because they're going to get a great return on their money. yeah, that's going to be part of it. But sometimes, because it's just an opportunity to get either involved in a deal, be able to look over my shoulder in terms of what I'm doing on projects and get some learning out of it, or maybe get some one-to-one time with me as well in terms of supporting them in their property journey. So in the same way, when you're speaking to a potential investor, particularly somebody's brand new, they're just starting out, you know, it may be they want to get involved with you, not only because you're going to help them make some money, but also because they may be able to get some learning opportunity from that particular project. They may see where you source the materials from, how you do the renovation, how do you have the communication with the builders, how do you deal with building regulations, you know, all these things, or whatever you might be doing on your project. For example, if it's a HMO, how do you kit it out, how do you dress it, how do you market for tenants, and how do you sell the rooms. For different people, there'll be different things that they want to get from investing in property. So don't just assume it's purely the highest return somebody's looking for. Sometimes other things, like I said, it might be some time, or it might be an opportunity to learn about deals and projects as well. If you're in a situation where you've got several investors, several lenders possibly coming into a deal, just be careful how you structure that. So for example, if I'm doing a deal, say it's £300,000, and if I've got 6 investors of £50,000, that's just, you know, a complete headache for me in terms of managing and organizing that. My preference there would be to maybe have a couple of lenders to come in at about £150,000 each into a project. However, sometimes that isn't practical. You might have more people involved in a project. Just think about what you need to do in terms of sharing the information about the project and what's going on, keeping people up to date in terms of that. Just a little quick tip for you. What I tend to use is a software tool called Dropbox, which is really a file server based in the cloud. You may have come across it. And we keep our files there. So when we're working with investors, they can see the same files that we have access to. They can see how much we spent, where we got to on a project. And it just means communicating with them is much easier, particularly if you've got more than one investor in a project that you're sharing the information with. Now, when you are looking at a number of people together, let's say you had a group of people over here, you've got say 4 people and they put £100,000 in together into the pot, and you've got 4 people over here and they put £100,000 into the pot, so you've got 400,000 here with 4 people, you've got 400,000 here with 4 people. On this one, they have one person that goes off, he finds a project, he manages the build on it, the renovation, the refurbishment, whatever, deals with the builders, the architects, and then deals with the estate agent at the end, oversees the sale with the solicitors, brings the money back to the investor and say, hey, I'm back, I've got £500,000 and we've just made £100,000 between us. Now that actually is not the correct way to do it, because effectively what you've created here is what's called a collective investment scheme, or a CIS. You've nominated one person to lead that project effectively as a fund manager to go away and make money for everybody else. That's a regulated activity, and again, when you look at the document I mentioned earlier on, the PS 13.3, you'll understand a little bit more around that. This is not the way to do it. On the other hand, over here, if you've got 4 people and they've got the £100,000 and they're nominated to different roles, so they're collectively making decisions, it's not based on one individual making a decision. Here you're collectively working together, you're going off to different things, one person sourcing the deal, another one's working with the builders and project managing, somebody else might be dealing with legals, whatever it might be. There's collective work and collective decision making here. This will be the correct way to do it and to avoid making mistakes. Now, regulation is really important, the FCA rules. So as I said, you know, you don't want to make mistakes, and you certainly don't want to end up in jail and sending me an email from there saying help, because there is nothing that I can do for you there. So it's really important. You know, I'm making a little bit of a joke about it, but really it's important you understand the rules and regulations of the environment that we're in, so you do things properly and ethically. Because, you know, at the end of the day, there's no shortage of money out there if you're a good person, you invest in the right way, and you're helping everybody else make money. There's trillions of pounds that slosh around every day around the world. What you're looking for is small amounts of investment with people that you can work with to build your portfolio and help others do well too. So look, as I said, there's plenty of opportunities there. Just do things in the right way. So where is it you're going to find these potential investors from? Well, I think the best place to start, as I mentioned earlier, is with friends and family, letting people know what you do. But it's really important that you get the message out there and let people know more about what it is you're doing in property. So whatever the strategy is you're doing or you're learning, even if you're brand new and just getting started in property, just start talking about what it is that you're interested in doing in property and what you're looking to achieve. Because what that does, it just raises the awareness of what you're up to. Don't become the world's best kept secret. Get the message out there, let people know what you're doing. And I get this quite a lot. Well, I'm just starting out, I'm brand new, I have no experience, I have no track record. How am I going to be interesting for anybody to want to talk to in property? Well, actually, you've just got to start talking about what you do. So for example, if you're on Facebook, if you've been to look at a property that you want to purchase, just talk about the property. So I've been to look at this property in this area. Looks like the purchase price will probably be this, or probably cost us this much about renovating it, and we'll probably sell it for this. Really excited about my new hobby, if you like, or my new passion, however you want to describe it. And what you're doing is you're just getting the message out there what you're up to. Now, just to be clear, you're not asking for any money there. You're not saying, I found a deal, who's got some money? That's not what you're saying. What you're doing is just sharing the kind of things you're up to. Even if you're at a property event at the weekend and Monday you're back at work, doing a tea break, you're chatting with people, what did you do at the weekend? You say, I was at this property event, we're learning about property, I'm networking with other people, I'm meeting lots of like-minded people, there's amazing things happening right now in property. Now, if they just turn around to you and say, oh, okay, did you want 2 sugars? They're really not interested, right? They've just switched off. If on the other hand, they start asking questions about, oh, how does that work? And, isn't that a bit risky right now? What's going on in the property market? And are interest rates going to change? That shows that they're curious and they're interested in about what you're doing. So it's just really about getting the message out there, letting people know what it is that you're doing, and just talking about it on a regular basis, making sure you're consistent in sharing your message. So what you don't want to be doing is for 2 months talking about looking at properties, different projects you're up to, and then all of a sudden you start talking about share trading or your internet marketing business or something else. You need to stay consistent in terms of what you're doing, and you'll get the results that way. Remember one of my earlier videos I was talking about making sure that you're consistent and persistent with what you do to get the results. That's how success comes to property investors. So if you've exhausted your friends and family, or you've bored them to death, or they just think it's your next harebrained scheme and they've had enough and they're just really not interested, then the next best thing to be doing is making sure that you're attending lots of property networking events. Now, I've been attending networking events for about 11 years now, and the first time I went to a networking event, I sat at the back of the room in the chair closest to the exit. Just in case things got a little bit weird, I wasn't quite sure what I was expecting. Am I joining some kind of crazy cult? And if things did feel a bit uncomfortable, I could just quickly and quietly leave without anybody noticing, right? But things have massively changed because I realized how open and supportive many of these environments are. Not all, but many. And some of the contacts and connections you make are just phenomenal. And over the years, there's been many people that have helped me along my property journey, and I've been fortunate enough to now be able to give back and help others. And after a few years, I realized the power of being able to get a group of people together to talk about similar interests in property, and how you can start building friendships and relationships, and potentially even investors in your projects as well. And even if they're not investors, just learning and supporting each other. So much so that after a few years, I started running my own little investors evening. It's a Birmingham Investors Curry Night, it was called at the time, and then started running networking events and hosting other property events, and I still do now. I run a regular property networking event in Birmingham, so if you're around in Birmingham, send me a message and I'll get you some details across. So the power of being in a room like that is something I certainly recognize, because then I've now, as I said, run events and have done so for many years, because it means you just get to connect with so many people in that room. You build your contacts really fast. So think about property networking events, and remember what I said earlier on. This is not about you going there and doing your sales pitch. This is not about, hi, I've got this deal, this is what I'm looking for. No, this is about just getting to know people, talk to people. And I think I'll probably do a separate video just on property networking, because I think it's a huge topic in itself. But effectively just focus on helping the other person, understanding them. If they're talking about you, they may ask about you. Talk about what you're doing, what you're up to, and just take the conversation from there. So getting out there through friends and family, through networking events, property events you might be at, building your contacts and relationships there. Make sure you've got some business cards with contact details on, although I think it's more important to collect contact details than it is just to give them out. And of course, don't forget social media, your key platforms. Just pick whichever one or two you like being on and just, use those. And, if you're really uncomfortable, doing stuff online, like sort of to camera like this, look, just get over it. I'm not that comfortable as speaking to a lens. I'm much happier being on a stage speaking to an audience than I am looking at a lens. But you'll get over it because it's a way of getting your message out there to people in terms of what you're doing. So for example, if you're on Facebook, get onto the various property groups, start building your contacts and connections, and just start telling everybody what it is that you do in property. Now, if you have done some projects already, so you're not brand new to investing, make sure you capitalize on that by sharing that information as well, the kind of things you're doing. So sometimes I'll do video walkthroughs of projects I'm doing, whether we're starting them halfway through or once they're finished. And it's just, it's just nice to share that information, but it also then positions to other people what it is you're doing and the kind of things you're up to. Now, once you've started getting the introductions, the contact, the connections with people, nobody's going to pull out their checkbook and say, so how much is it you said you need? I'll just write that check out for you now. It doesn't happen in that way. You have to then take the time to start nurturing those relationships, build those relationships, and get to know people. So quite often when we're talking about large amounts of money, potentially people investing with me, what I like to do is invite people to my home. I'm filming this from my home studio right now. I invite people to my home. We'll have a chat, we'll have a coffee. We'll maybe go and look at some projects, either ones that I've already done that are finished or some of the ones I'm doing right now. Generally, there'll be 2 or 3 I'm running at any one moment in time. So it just gives them a feel for the kind of things I do, an opportunity to get to know each other a little bit better. And you may not be in that position where you've got projects you can show people that you're doing right now, but it may be you've already done projects. Keeping the photographs or sharing the numbers or what you did, how you did that, sitting down with people with coffee and having a chat with them is a great way to get to know people. And I think ultimately, people do business with people like themselves once they've had an opportunity to get to know, like, and trust you. That's where business happens. And, you have to create the space for that to happen. It won't happen by itself. You have to allow people to get to know you, learn a little bit about you. So, I'm doing these videos, for instance, right now. It's giving you an opportunity to learn a little bit more about me, right? In the same way, you could be just getting out there, sharing what you're doing, and you're building relationships in that way. So whether it's one-to-one or one-to-many on a camera, just like this. So once you've found somebody that you want to work with, you've either got to know them, it's a friend, family member, whatever it might be, and you're now talking about putting the deal down onto paper, as it were. I'd say the first thing I would look to do is really just make it easy for them to be able to walk away from the deal. I know what you're thinking. Why would you want to walk away from the deal? You've done all this effort that I've talked about, and now I'm giving them an opportunity to walk away from the deal. I think it's really important because people need to be certain this is what they want to do. Because if there's some element of doubt, it's better that you know that now than it is the day of exchange of contracts, just before the money needs to be sent to the solicitors, whatever it might be. It's better to just get that out now. If it isn't going to work, that's fine. Because as I said earlier, there's a huge amount of money out there. If you've got the right opportunities and you're the right person, you'll attract that money for your deals. Don't worry about that. You just move on to the next person in your potential funnel that you may be having a conversation with. But just make it easy for people to say no, because it's better that now that they walk away at this point than further down the road and it becoming a problem. But let's assume you've got all that wrapped up and you're ready to kind of get it all agreed. The simple place to start is a heads of terms, a really simple document. This is who you are, this is who I am, this is what the deal is, and this is the arrangement we have around the deal. Then get that sent off to a solicitor to make sure they put it into a proper contract for you. All sides are protected properly, and also make sure you're using other professionals such as accountants to help you structure the deal in such a way that it's tax efficient. Because let's face it, if you're making a little mistake in how you're structuring a deal, then that could cost you thousands. In fact, there's a deal that I just did recently. Just by structuring it slightly differently based on the advice from the accountant, I saved £80,000 on that one transaction. So it's important to have professionals around you that can help you and guide you, or some people refer to them as a power team around you. And then, whether they're surveyors, architects, all these people are qualified professionals that are around you to help and support you to produce the result you're looking for. If you want some assistance with a superb property accountant, I'm happy to connect you. Just send me a message and I'll make sure that I send you the contact details there. So, let the professionals wrap up the deal properly for you. Make sure it's done properly so that you can produce the results that you're looking for. You deliver on the expectations that have been set, and you look after other people's money with your life. For me, I would never take on risky projects with other people's money. So I use a lot of investors' cash for projects that I do, but I make sure I de-risk it as much as I possibly can, because at the end of the day, I want to sleep easy at night, making sure that I'm delivering on my promise. In the same way, I'd encourage you, make sure that you're doing good deals. It takes a long time to build a reputation in this business, and it'll take you 5 minutes to destroy it. Do a bad deal, everybody will know about it. Do lots of good deals, a few people will hear about it. So look, it's important that you're doing things properly, you're doing things ethically in a win-win way. So time now to answer your questions, and on this particular topic I had 2 questions recently from Sabina, so I'm going to go and answer those. The first question Sabina was asking is, do you get the deal first and then the investor, or is it the other way around? This is a great question and a common question as well. Do you go out there finding the opportunity first and then you go and find the investor who may want to work with you on that project? Which one do you do? Well, around this I've tried lots of different things. I've gone through phases where I've really got focused on finding really good opportunities and months kind of lining up those deals and getting them all right. And then once they've all agreed, then I kind of turn around and think, actually, I've got the cash ready to do those deals. And at other times, I've spent a huge amount of time nurturing those relationships with investors, taking time to really strike up a good deal for them and for myself as well, with the funds already. But actually, I've taken my eye off the ball and not had enough deals in my pipeline, which means that I now haven't got anything immediate that we can turn to. So it's really important that you're spinning both plates at the same time. You constantly have to be looking for good opportunities, and you constantly have to be having conversations with potential investors so that you have a pipeline of both, because some of those deals will never materialize or fall by the wayside. And with some of these investors, they may agree and they may never materialize into a potential investment as well. So it's important that you have a funnel running here and a funnel running here as well. The second question from Sabina is, how do you find investors? Now, hopefully that's something I've been able to answer in this video, but just to summarize, essentially, first of all, you have to be investable. That means you need to make sure that you're ready to attract the investors to you, you've got the opportunities to work with, and you're credible as well. That doesn't mean you have to have a track record and experience. It just means you need to make sure you understand what you're doing and you're going to be doing deals in a good way. Then what you're doing is having lots of conversations with people. You're telling people what you're doing, and to make yourself investable, as I said, it will bring people to you. Attraction marketing, as I mentioned earlier on, rather than kind of pushing out, I've got a deal, who's got some money? What you're doing is just putting out there the kind of stuff you're looking at, projects either you're doing or you might be doing, or even go and look at other people's projects and do like a little video tour around there and just talk about the project and the numbers. And because what it does, it just associates you with doing those type of projects. And even if it's not your project, you're not misleading anybody, you're just talking about, this is a friend's project, I've come to have a look at, this is what they've done here, and I just thought it'd be really good to share that with you, because it's something I'm interested in and I'm interested to do more of. So start first of all with friends and family, and then property networking events, and also online. I think they're the 3 places which I think are the best places to find your potential investors. If you have a question you want answered, please put it in the comment section below and I'll do my very best to get that answered for you. So now the question of the day for you is, what is it that you've been doing to find potential investors, or what is it that you've done to successfully find a potential investor? If you enjoyed watching this video, please do subscribe. That way you'll get notified when other videos just like this are available. Thank you so much for watching all the way to the end. My name is Saj Hussain, also known as the Property Joint Venture Expert, and your partner for wealth creation through property.